Hello. The media has named Joe Biden as the president-elect, meaning that he will be the next and 46th president of the United States of America. So today I wanted to go over the Biden tax plan and let you know, should he move into the White House officially on January 20th, what his tax plan could mean for you and your wallet. What's up, everybody? I hope you're having a beautiful day. And for those of you that don't know, my name is Nenad. However, what I do know is that 2020 has been a crazy year for everyone, and of course, that craziness has transferred into our presidential elections as well. Most media outlets have declared Joe Biden as the next president. However, Donald Trump has filed many lawsuits in different states to contest those results. Basically, breaking down this fiasco into plain terms, what's happening is Joe Biden is saying, "I will be the next president." However, Donald Trump is saying, no, you're not. So without getting too deep into the politics, I wanted to go over Joe Biden's proposed tax plan. That way, if he does get elected president, that you know what changes could be coming to the tax policy and how those changes could affect you. Today, we're going to go over 4 different changes to the tax policy that the Biden tax plan is proposing. And those 4 changes are changes to the income tax, changes to Social Security tax, changes to capital gains tax, and changes to the corporate business tax. Now, in terms of the income tax policy changes, Joe Biden has said on multiple occasions that he's only going to be raising taxes on people who are making over $400,000 of income a year. The current federal income tax rate for those taxes to be filed in April 2021 varies from 10% all the way up to 37%. Now, what you will see here is that each chunk or taxable income bracket has its own corresponding tax rate. Now, let's say, for example, you make $50,000 a year. Technically, you will not be paying 22% of your $50,000 in federal income taxes. However, what you will be paying is the effective tax rate, which in this case on $50,000 is 14%, or just about $6,800. So to figure out exactly how we got those numbers, what we first need to do is break down that $50,000 worth of income into each of its respective tax brackets. So the first tax bracket goes from $0 to $9,875. The second tax bracket goes from $9,875 to $40,125. And each of these tax chunks have its own tax rate, and that first one is 10%, the second one is 12%, and finally up here we have 22%. So when we do all these calculations, we figure out that your total federal income tax is just about $6,800, and your effective tax rate is just about 14%. So what you'll see is that even though you make $50,000, and you fall into the 22% tax rate, you actually only end up paying just about 14% in federal income tax. So what the Biden tax plan is proposing is that the highest income bracket at 37% be changed to 39.6%, which is actually what it was under the Obama years, and for that 39.6% to kick in once you make over $400,000 in a year. Under the Biden tax plan, he is proposing that anyone who makes over $400,000 is once again subject to the 12.4% Social Security tax. Now, if you're an employee making between $0 and $137,700, you are responsible to split 12.4% of Social Security tax between yourself and your employer. So let's say, for example, you are making $137,700. You as the employee are responsible for $8,537 of Social Security tax. Now, let's say you fall in between this red zone at $300,000. You are no longer responsible for any Social Security tax above $137,700. However, if you reach the $400,000 limit, Biden is proposing that you are once again subject to that 12.4% Social Security tax. So let's say, for example, you're making $500,000. That's $100,000 over $400,000. So you are now responsible to pay 12.4% Social Security tax on that additional $100,000. However, if you are the employee, you are responsible for 6.2%, like before, which is $6,200. So, if you are making $500,000 of income, you are responsible for $6,200 plus $8,537 of Social Security tax. So as you saw, Biden is looking to add an additional 12.4% Social Security tax onto anyone who's making over $400,000 a year. Under the current tax law, that 12.4% Social Security tax only applies to income up to $137,700 and does not apply to any income earned after that amount. But before we get into that, if you're getting any kind of value out of this video, I would really appreciate a thumbs up, and I really want to thank you for watching. I make videos like this on real estate and finance every single week, so if you want to stay up to date, go ahead and click that beautiful red subscribe button down below. The next thing that we're going to dive into is the proposed changes that Biden is making to the long-term capital gains tax. And for those of you that don't know what long-term capital gains are, it's any investment that you hold for over a period of a year or longer that goes up in value. For example, if you buy an investment property for $400,000 and you end up selling that investment property for $500,000 after a period of a year or longer, you have $100,000 of capital gains on that investment, and of course, there is a tax applied to that capital gains. You will see that the percentage of capital gains tax that you pay on a long-term investment is dependent upon your income, and that percentage varies from 0% all the way up to 20%. So going back to that example, let's say for instance you bought an investment property for $400,000 and you sold that property a year later for $500,000. So here in this particular instance, you would have $100,000 of capital gains. So as you can see from this capital gains chart here, your tax bracket depends on the income you make. So let's say, for example, you make $80,000 a year, you would fall into this 15% tax bracket right here. So 15% of 100,000 is $15,000 of capital gains tax that you would have to pay. Now, what Joe Biden is proposing is that he would like to add another tax bracket, and that tax bracket would be 39.6% on anyone who's making over $1 million of income per year. So going back to the same example, on $100,000, 39.6% is $39,600 in capital gains tax for anyone who's making over $1 million. And finally, let's talk about changes to the corporate tax rate. So any of you business owners out there, pay close attention. Under the current tax law, the corporate tax is at 21%. However, the Biden tax plan is looking to increase that corporate tax all the way up to 28%. This will likely go on to affect the consumer as well, because now that businesses have to pay more in taxes, they will likely increase their prices in order to offset the amount of taxes that they are paying. And there it is. Those are the 4 proposed changes that the Biden tax plan is looking to make to the tax code. If you guys have any questions, feel free to comment them below. I love to help in any way that I can, and I want to thank you guys again for watching, and I'm sure I'll see you next time.